Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's Daily Market Update. Leading news stories from the weekend is China and the PBOC once again slashed the reserve ratio requirements for its banks. The central bank cut the reserve ratio by 100 basis points in order to fight the economic slowdown that appears to be looming. The effect will be a large injection of cash into the economic system as the banks will be more willing to lend. They'll need to be careful not to fuel an asset bubble, as that could be detrimental if it bursts. And the Aussie dollar has opened the week higher on the news thanks to Australia's reliance on exports from China. Construction in China has been slowing, which has affected iron ore and coal prices. More lending for construction projects will give a boost to Australia's export sector. Watch out for a speech by Reserve Bank of Australia Governor Glenn Stevens shortly, as he could jawbone the Aussie dollar back down. And looking now at the Kiwi dollar, it's had a mixed morning. The Kiwi opened the week higher thanks to the news out of China, which will provide a boost to New Zealand's export sector. The Kiwi looked to give up much of the gains as inflation figures were released and fell short of expectations. First quarter inflation fell to negative 0.3% from negative 0.2%, which will add weight to the calls for a rate cut. Now, we don't expect a rate cut from the RBNZ thanks to the red-hot domestic property market at the moment, which the central bank wants to avoid fueling any further. And finally today, the Japanese yen has strengthened at the open of the week thanks to a lift in the tertiary industry activity. The industry activity lifted 0.3% month on month, which is well ahead of expectations of negative 0.7%. Further adding strength to the yen was the Bank of Japan's Governor Kuroda, suggesting that the market may be caught off guard if interest rates begin to rise once inflation hits its 2% target. The bank remains upbeat about the prospect of hitting the target later on this year or early in 2016. That's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.